Talking all things currency. Lachlan Meakin, go markets. Well, go indeed. Go Aussie. That looks like a pretty
Good morning,
decent
Annette.
report. I know. We've only just looked at the headlines, but that's all the currency needs, doesn't it?
Yeah, I was just watching the Aussie dollar. A fairly good reaction there. It's pushing right up against that resistance it's seen the last couple of weeks that ran near that 72.5 kind of area. So, yeah, it liked it. I mean, I think the RBA is getting to the point now where all their criteria has been met almost. They had employment, other central banks, and inflation. So, depending on how it goes next week with the Fed and also the Bank of Canada, I think it looking likely they'll raise. The RBA is going to be in a position where, in the Anglosphere anyway, they're going to be left behind unless they start changing a bit of their rhetoric at the next meeting.
It certainly makes the Aussie dollar a bit bouncy, though, because the RBA is highly unlikely to deliver what's being priced into the markets right now. Could the market decide to fade this big move in the Aussie?
Very, very possibly, especially on a technical level. It looks like it's hit a bit of resistance. So I think it's in a reaction. You always get these reactions after a news release. And as you said, the market, I think it's 100 basis points that the bond market's priced into the Aussie this year, which seems well over the top. But we are at a very low base and there's a lot of support down here. So I wouldn't be surprised with a bit of tailwind as well from commodity prices, etc., to see the Aussie strengthen a little bit here. And I've got a feeling the RBA might surprise to the hawkish side in the Fed meeting with the bond purchasing, etc.
Oh, then maybe we should be buying that Aussie. I said we were just talking before, FX trading. How juicy is all of this? Now, of course, we have CPI next week. That's expected to be high. Then we have ourselves a holiday before the RBA steps up. So there's lots of movement here. We had an early discussion about gold, commodity prices, risk, US dollar. There's a lot of forces pushing this currency around right now.
Yeah, absolutely. I mean, there's just a big repricing. The 2022, the theme's going to be that normalisation of rates, what central banks are doing. So volatility is going to be part of it, especially in the FX market. So trade carefully, but I think the US dollar is going to remain pretty well bid, especially against the low yielding currencies like the euro and the yen. The stuff like the Aussie dollar, there's a lot of questions. As I said, we're at a very low base, and have we had peak dovishness from the RBA? We'll have to wait and see. But I think the Aussie dollar should actually do well this quarter. It'll certainly hold. I think the big support levels are at 71.5 to 70, and more than likely get up above that 73 level.
Well, we talked before, Lachlan, about the market being short Aussie. Could there be a pain trade ahead?
Well, that too. I mean, like you look at commitment of traders, there's a big Aussie short there if you look at the CFTC data. So that's always a bullish sign as those traders need to cover their trades. I certainly think that'll play a part in it. And also, I think the equity markets are going to bounce back a bit too. I think the sell-off's a little bit overdone. And with that risk on as well, that will benefit the Aussie dollar. And I'm optimistic on the Aussie dollar's performance anyway for this first quarter.
All right, so Aussie's getting all the attention right now, but in fact, it's going to be the Kiwis that hike first. Is anyone looking at the Kiwi dollar at the moment?
Yeah, I mean, we're at a point now with the Aussie-Kiwi cross. It's been a good trading vehicle, this one. It's literally, you've got that median price around 106, and buying anywhere, say, below 104 and selling above 108, it's just been a pretty easy trade for the last 12 months. So I can see the Aussie dollar outperforming, to be honest, the Kiwi dollar. I think we've got more room in our central bank processes to increase that with the interest rates, where the Kiwis have already started. But I think there is a cap. I think I'd be selling the Aussie-Kiwi cross probably anywhere above 107. I think that's about as far as it'll get. And the Kiwi dollar is much more sensitive to risk as well. So if we see the equity market come off a little bit, the Kiwi dollar should perform worse. If the equity market kind of rallies and recovers, then maybe it'll give it a bit more of a headwind than ours.
And just finally, what other currency is on your radar? I mean, we've got the pound ready to hike. We've got the yen not hiking. What's also on front of mind for you?
Oh, Canadian dollar's looking quite good. I mean, it's looking very likely next week. The Bank of Canada is going to raise rates. Also, with oil prices shooting off as they are, it's got a lot of strength to it. Canadian versus the euro, if I was going to buy the Canadian to be against the low yielding euro. But yeah, that's looking very strong as well. And I think all the higher yielding currencies with the hawkish central banks are going to be the ones that do well in this first quarter at least. So the US dollar, pound, Canadian, they're the three you'd want to be long, as short the euro and the yen, I think.